A very good afternoon, everyone. I CA Vijay Agrawal, RCM from CARC and the moderator of this webinar. I'm delighted to welcome you all to this webinar, which is being organized by the CP Committee of the ICI. We are privileged to have an excellent lineup of distinguished speakers and leaders of the profession with us today. In this series, I welcome our distinguished guest, CA Satish Kumar Gupta ji, Chairman CP Committee, CA Vishnu Agrawal ji, Vice Chairman CP Committee, Ms. Ginni Goyal, Secretary CP Committee, today's learning speaker, CA Gopal Kedia ji, and CA PC Parwal sir. It's my pleasure to this webinar for this webinar on GST Appellate Tribunal and Income Tax Act 2025. In a short while, we will start this webinar. Before that, I would like to inform you that CP Committee organize the webinars on every Wednesday and Friday. So you are requested to please block these 2 days. Apart from that, I would also like to apprise you about the CP Committee. In today's ever-changing professional scenario worldwide, the biggest challenge before the professionals face is how to stay on the top of their game while adapting to new requirements and norms. Therefore, it is important to be up to date and offer unique guidance, influence others with their innovative approach and expertise. It is also vital to stretch old ideas beyond traditional boundaries to create new perspective. In this context, Continuing Professional Education Committee, CP Committee, facilitates professionals to maintain, improve and broaden their knowledge, skill and expertise required to achieve their professional goals through webinars, seminars, etc. The program for this evening is as under. We have 2 sessions of 1 hour each, and the topic are: first one is the GST Appellate Tribunal procedure and entry cases, and second topic is New Income Tax Act 2025. Our eminent speaker will talk about the above mentioned 2 emerging area of professional interest and will provide us with deep insight about the topic. Before that, friends to formally introduce and give the opening remarks and welcome address. We have with us CA Satish Gupta ji, Chairman CP Committee, and CA Vishnu Agrawal ji, Vice Chairman CP Committee. So first, let me introduce CA Vishnu Agrawal ji, who is a Central Council member of the ICI for the term 2020, 25, 29. He currently serves as the Vice Chairman of the CP Committee and the Directors Committee of the ICI. Additionally, he is an esteemed member of several other key committees of ICI. With over 2 decades of experience, he specializes in income tax matter and has also authored the book Landmark Judgment of Income Tax. Beyond his professional commitment, CA Vishnu Kumar Agrawal is actively involved in social services and community initiatives also. His professional acumen and leadership role and dedication to both the profession and society make him a respected figure in the accounting and taxation domain. So I now invite CA Vishnu Kumar Agrawal ji to kindly give his opening remarks. Over to you, Vishnu sir.
Thank you, Vijay Agrawal ji. Respected our own chairman of the CP committee, CA Satish Gupta ji. Today's speaker, Gopal Kedia ji on the GST Tribunal from Mumbai, and PC Parwal ji on the new Finance Bill 2025 from Jaipur. Our Secretary of the CP Committee, Ginni Goyal ji, and all the back office staff of the CP Committee. I welcome all of you in this particular webinar on today's organized by the CP Committee. Friends, before going ahead, first I wish each one of you today is the Ganesh Chaturthi. So गणेश चतुर्थी की मेरे ओर से, मेरे परिवार की ओर से और पूरे ICI की ओर से आप सबको बहुत बहुत शुभकामनाएं. Friends, today our chairman has selected the topic, the GST Tribunal practice and vis-a-vis the new Finance Bill 2025. Our chairman has always thought that my each and every members from our fraternity gain the deep knowledge of our subject. Friends, the GST Tribunal is now going to be set up, and more than 650,000 appeals are pending to be decided by the GST Tribunal. So it is very good opportunity for our chartered accountant to do the practice in the GST Tribunal. Friends, I have seen in the income tax also, in income tax tribunal, only not more than 300 chartered accountants are doing the practice in the income tax appellate tribunal. Beside the tribunal is set up by more than 50 years. Friends, the GST tribunal is now government is now setting up, and very good opportunity for each and every chartered accountant. Otherwise, we will give our case to another chartered accountant or advocate to argue in the GST appellate tribunal. So my request each one of you to take the best to best depth knowledge of the GST tribunal. And today we have with us Gopal Kedia ji from Mumbai. And from last 10 years, when GST came from 1st July 2017, I know Gopal Kedia ji has delivered more than 100 lectures on the GST topics. And I have invited more than 25 or 30 times Gopal Kedia ji to deliver the lecture. And the same way, the new finance bill 2025 is coming. So we have to update on each and every section and rules of the income tax new finance bill 2025. And I thought that PC Porvalji is the authority to give lecture on the new finance bill 2025. Friends, apart from this, our CP committee chairman is here. He will apprise what we are doing in the CP committee, but I am also vice chairman of the direct tax committee, and we have released right only 10 days before our guidance note, 44 AB revised guidance note. So I request each one of you, the revised guidance note is hosted on the website. So please go through, because tax audit is going on. And we have also released ITR 1 and ITR 4, which are also hosted on the website. And remaining ITR, we are planning to host on the next 7 to 10 days. They are under pipeline. Friends, that whenever I deliver the lectures, always our audience and so many of our chartered accountants are raising the query that tax audit date will be extended or not. Friends, we the from last so many years, from last 4 to 5 years, the ICI has council has decided that we will not approach to the CBDT for extend the time limit for any ITR form or tax audit. But certainly, if any move, if we want to move for the representation for the time limit for the ITR and tax audit, certainly we will do. Friends, with these words, I welcome each one of you, and I request our Vijay Agrawal ji to introduce our chairman CA Satish Gupta ji for benefit of all the members. Thank you, friends.
Thank you, Vishnu sir, for sharing your valuable thoughts about the session as well as the CP committee. Now I would like to call upon the chairman, CA Satish Kumar Gupta ji, who is chairman of the CP committee and the brand ambassador of the SMP firm. Before that, I will like to introduce CA Satish Gupta ji. CA Satish Kumar
Thank you,
Gupta ji.
Vijay. Thanks a lot. No
Sir, let
introduction.
me introduce 2
No,
minutes
no.
about you.
Sorry.
That would be better for our audience. CA Satish Kumar Gupta ji is presently serving as the chairman of the CP committee of the ICA. In addition to this role, he is also the chairman of the UDN Directorate and vice chairman of the committee for member in practice. He previously served as central council member of the ICI from 19 to 22. He is also renowned speaker and author specializing in income tax, assessment, search, survey, and professional development topics like goal setting and career planning. See, Satish
Thank you,
ji,
Vijay. Thanks a lot. My
thank
dear
you
Vice
for this
Chairman of the
one.
committee, my brother
Thank-
in the council representing WIRC and Bombay, and a very great, I think, practitioner on income tax, Vishnu Agrawal ji. My elder brother of Jaipur, to whom I say on I see that he is the mentor for me or for several practitioners at Jaipur, Parwal ji. My brother Gopal Kedia ji, who is going to speak today on GST Tribunal. Vijay Agrawal ji, Regional Council member from CIRC, my dear brother. And Ginni Goyal ji, who is the secretary of this committee. And team CP, team tech, and my dear friends who in very large number attending this webinar. I welcome each one of you. I thank you each one of you for attending webinars of the CP committee. Friends, this year At CP committee, we are focusing on two things: quality of the program and availability of the program. And believe me, friends, we are going to ensure this year that we get real-time CPE credit system. TCS is working very hard on new portal. Whenever new portal is launched, we will come up with this real-time CP credit also, which I think is the need of the hour, because you must be aware that there are only 20 hours requirement of CPE for one calendar year, that too for non-senior citizen having COP. So it is not much that in 12 months you have to physically attend 20 hours only, and that too, if you wish, you can attend 4 hours on digital learning hub. So this is not much requirement, and I expect and I hope that each one of you will welcome our endeavor to come up with real-time CPA credit system. Friends, in CPA committee, we are organizing two webinars on Wednesday, on two programs in one webinar on Wednesday and two on Friday. So therefore, 8 webinars are organized in a month, having 16 speakers. What we are planning, friends, we are going to organize as much as 100 webinars this year. I think we have organized by this time 30 around webinars, and by the year end, that is 12 February, we will complete the target of 100 webinars. And I know that under the leadership of Ginni Goyal ji, this work is not a big work, and we will plan that how we achieve this 100 webinar target this year. Second thing, friends, I was discussing today with several members that the non-corporate entity accounting and auditing is the challenge for this year for our members. So I have requested Ginni ji that kindly arrange 4 5 programs covering all the accounting standards affecting the non-corporate entities, and even we can cover some of the standards on account auditing, so our members refresh with these accounting standards and standards on auditing, and they are well prepared for the audit of non-corporate entities. And I think they will definitely love all these webinars which we are going to arrange on accounting standards and standard on auditing. So let us hope for good. Otherwise, also, friends, in the webinar series, we are requesting our members who are residing out of the India for coming in the webinars and sharing their views and experiences in respect of opportunities for our members in their respective countries. We are requesting the members who are in industry to come in the webinars and cover the opportunities in their specific industries. We are also requesting our members who are practicing the government schemes to come in this webinar, in these webinars, and discuss the opportunities in government scheme sectors for our members. So with these things, I request each one of you, if you are interested to speak in our webinars, to kindly register your name and 2-minute video on the select topic to the CP committee. The committee will research on your video, and thereafter will the committee will let you know that whether you get that chance or not. But we would like and rather love to give opportunity to each one of you who is interested in speaking in the webinars organized by the CP committee. Friends, as rightly told by Vijay Bhai about in my introduction, that I am heading the UDIN directorate, as well as I am vice chairman of CMP committee. So, friends, few things I would like to share with you about the CMP committee. We are coming up with several initiatives benefiting our members. Just for some examples, we are coming up with a credit card of a private bank. We are coming up a term loan, unsecured term loan scheme with SDFC Bank Limited. SDFC Bank, we are coming up with a drop down working capital limit for our members on very, very competitive interest rates. For example, term loan, we are coming at 10.6%. Drop down working capital, we are coming at 11.6%. All the things are almost finalized. Committee has approved, and we are just to declare all these things. The things, the online working system is being implemented, and it will be definitely a very good step. And I think you would love all these schemes which we are coming up. We are also coming up for the housing loan scheme for our members at the very competitive rate by the SDFC Bank. We are also coming up some CASA accounts from some private bank, AU Bank Limited. AU Bank has also become universal now. So we are coming up credit card and the CASA accounts with them. We are also coming, friends, and just one thing which I want to speak about the credit card, that every member who takes the credit card can get the discount of 25% on the renewal payment of ICI fees in any 1 year of their choice. So this is being, we have done arrangement in that credit card. I think you would also love that particular arrangement which we have done. We are also thinking to bring several medical insurance, term life insurance. We are coming up with up to limit of 10 crores. We are working on that. We are working on several other things which you would definitely love. Apart from these initiatives, we are also at CMP. We are thinking to bring. We have already brought the GST litigation course of 6 days. Some of you must have attended that course, and kindly give your feedback and suggestions about that course so we can improve the things. And we are also coming up several other courses like the virtual CFO course, the super real estate consultant, and there are 3 other courses, networking, like etc. etc. Something I would also like to speak about the UDIN Directorate, which I am heading this time, friends. Friends, we have taken 2 decisions in the UDIN, which are, I think, very important decisions, and you would definitely like both of the decisions. One thing, that no member would be in position to generate UDIN on his or her 61st tax audit, meaning thereby that member has the limit of 60 tax audits. So generation of UDIN shall be available to the member only up to 60 audits, tax audits. Thereafter, he or she will not be in position to generate the UDIN. Another thing which we have brought in the UDIN is that if any auditee change the auditor and do not pay the fees to the previous auditor, or even the previous auditor has something to talk with the succeeding auditor, but no intimation was received from the succeeding auditor, and being unpaid, the preceding auditor has no source to know the name of succeeding auditor. We are making UDIN technology available for our such members, that they can know the name of the succeeding auditor, and if whatever steps they want to take to recover their fees or to communicate with the succeeding auditor, he or she will be in position by knowing the name of the succeeding auditor. So these 2 changes we have already done, but one change will be applicable from October onwards, and one will be applicable from 1st April 2026 onwards. So, friends, we are thinking so far in the institute, all are working under the dynamic leadership of our president and vice president very hard, and we want that some things become easy for our members. Things become there are vast of opportunities for our members. So please give your suggestions that how we can do more. So now I don't want to take much of your time, because now the time is of Gopalji or Parwal sir. So I thank you very much again. I wish you happy Ganesh Chaturthi. I just seek the that Michhami Dukadam, because today is the Paryushan Parva also. So that is also accept my that request also. And I wish you all the best for the times to come. Thank you very much. Thanks a lot. Over the Vijay Agarwalji.
Thank you. Thanks a lot, Satish sir, for sharing your valuable thoughts and motivating our participant. Friends, now let us begin with our technical session. Today's first session is on very significant and timely subject, GST Appellate Tribunal procedures and intricacy. In today's discussion, we shall explore not only the procedure that will govern this tribunal, but also the intricate challenge from composition, jurisdiction, and powers to practical issues that professionals and taxpayers may face once it becomes functional. This topic is of immense importance to us as professionals because the tribunal will ultimately shape the way GST litigation is handled in India. I am sure the deliberation today will give us deep insight into how we, as chartered accountant, can play a pivot role in this evolving landscape. Our first learned speaker is CA Gopal Kedia ji from Thane, Mumbai. He has over 15 years of professional experience as a CA, specializing in indirect taxation with expertise in GST, with expertise in compliance, litigation, advisory, transaction, structuring, and refunds. He has delivered more than 300 lectures on GST at premier forums, including ICI, Regional Council, CP Study Circle, and the Chamber of Tax Consultant and the CAG Regional Training Institute. He is also impaneled as a national faculty for the GST program of ITDC, ICI, and had contributed throughout the leadership through article and blog on GST and indirect tax, establishing himself as both a practitioner and as educator. Over to you, CA Gopal Kedia ji.
So, thank you. At the outset, I would like to extend my heartily gratitude to CPA committee for extending this opportunity to me for sharing my thoughts or learnings with the participants. To begin with, first, as today is the birthday of Lord Ganesha, so I would like to wish everyone here Happy Ganesh Chaturthi. And I wish the Bappa bless every one of us with health, wealth, and wisdom. So, friends, when I'm talking about the wisdom, so we experience the same is absent while confirming the GST demand. Therefore, we are stuck in the loop of the continue of litigations. Now, when there are reasonable certainty about the institution of tribunal, which is likely to be operational from October or maybe somewhere in December, in few of the states and rest of the state it will follow. Then at the same time, we are also experiencing the larger inclination of our CA member, who, as Vishnuji has just told that there is an immense opportunity for every one of us. There are more than 6 lakhs cases are pending, and hardly any, very few handful of chartered accountants are practicing into this domain, and largely it is being taken by the lawyers and other professionals. So it is a very right time to gear up with the intricacies of this state provision. So we know that chartered accountants are competent; they have good command over the fact of the case and the law, but largely all these tribunals works function on the procedures set for the civil courts, and we have less exposed toward those procedures. So sometimes, like when we experience, there are certain small errors due to which we have to feel humiliation before the authorities. So this time it is a right forum wherein we can discuss all these procedural aspects. So today, the object of this session is to understand the GST procedures and intricacies. So it is not about the legal part. So legal part we'll discuss to the extent it is relevant for this topic. Rest of the things we all are aware, I believe. So that is what our today's session. So to begin with our session, so I would like to start. I have to sum up it by 5 o'clock. So we have around 36 minutes and I have 34 slides to complete. So I'll take a bird eye view. So it is mainly toward the procedural sides. Wherever the deep dwell is required, we will go into the depth of the subject. Otherwise, we'll touch upon the basic aspect. So this is what the legal framework for the GST 80 legal framework. So statutory provisions, as far as concerned, it's contained from section 109 to 120. And then there are rules which commence from 110 to 113A, and there are few notifications which has been notified, which is about the constitution of the bench, appointment of the member, and then so and so on. So friend, when we talk about the GST AT, so it has been constituted taking the power from section 109, 110 of the CGST Act. So it is important to note here that it is very interesting to note that the power of constitution of tribunal is lies with the central authorities. If you read down the section 109, so there has a power to constitute a GST AT, whereas if you go through the similar section for the state acts, so they do not have power to constitute a GST AT. So they will request the central government for constitution of the tribunals. So under this power, central government has issued this notification under which the GST tribunal has been constituted, and therefore that is the reasoning that the notification which has been issued for constitution of the tribunal is issued by the Ministry of Revenue. It is not by the board or the central government. Therefore it will not be available in your any of the online portal whatsoever. It will be available as far as the procedural rules are concerned, so it would be available under the Ministry of Finance directly. Under this notification, now two benches has been constituted. One is the principal bench, which is located at Delhi, and rest are the state benches which would cover the rest of the places. Now the principal bench will be authorized to heard or have the exclusive jurisdiction to heard all the matter related to place of supply. So if any order which is challenged before the tribunal may have multiple issues such as reversal of input tax credit, payment of output tax liability, RCM, and may have the issue related to place of supply. Even out of 4 cases, 1 case pertains to place of supply, the appeal shall lie before the principal bench. So even if you are practicing in say other states in Maharashtra and your matter lies or your matters contain certain issues related to place of supply, then appeal needs to be filed before the principal bench at Delhi. Now it has been notified that the procedure will largely be online. The appeal shall be filed online, and the portal has been introduced, though it does not have all the functionality, but at least it is introduced, so which shows the government preparedness that from the very beginning the procedure shall be online. And there are state benches as well, those has been notified, and these are the list of the various states where the benches has been notified. In Maharashtra there would be 3 benches which would be sitting at Mumbai, Pune and Nagpur, and there would be 3 circuits bench which would be held at Panji, Thane and Chhatrapati Sambhaji Nagar. Circuit bench will be on rotational basis. They will not sit they will sit based on the requirement, not on regular basis. So friends, if we I would like to have a comparison between the difference of the appellate procedures between the first appellate authority, that is Commissioner Appeal, vis-a-vis the GST, and at the same time we'll make certain comparison with the erstwhile tribunal under the pre-GST regime and the GST tribunal, so which will give us a fair idea or the difference how it functions. So nature of disputes as far as concerned, so before the Commissioner Appeal or the first appellate authority, any matters can lie. Similarly, under the SESTAT, there was no such restrictions. However, under the GST, as we discussed, any matter related to place of supply, exclusive jurisdiction lies with the principal bench at Delhi, and state bench can heard any matter except the place of supply issues. Appealable order. So as we know, the hierarchy of the litigation, first it goes for adjudication, then to first appeal before the Commissioner Appeal, and then to tribunal, then High Court and the Supreme Court. So in the appellate procedure, Commissioner Appeal is the first appellate authority, where the order of where the appeal against the order passed by the adjudicating authority shall be heard. And same is the case with the SESTET. However, under the GST matter, order passed by the revisional authority can also be heard. Pre-deposit, so it was 10% before the commissioner appeal. Under previous regime, it was 7.5% and 10% before custom and excise authority respectively. Now under the GST 80, it is 10% of the tax in dispute plus, or if matter is solely pertains to penalty, then 10% of the penalty quantum plus admitted or agreed tax liability. So please note that this 10% of the tax is in addition to what has been paid before the first appellate authority, that is commissioner appeal. So in total, it would be 20% of the total tax liability. And again, this is there is a further cap of 20 crores toward the maximum amount toward the pre-deposit. Filing fees. So we have experienced that before the commissioner appeal, it is 0. Previous regime, it was 1,000, 5,000, 10,000, depending on the quantum of the tax dispute. If we compare the quantum of the fees in the pre-GST regime and the GST regime is way higher than the it is payable under the previous tax regime. We'll discuss this aspects in detail later. Withdrawal of appeal, it is permitted now. Earlier, it was not permitted. It is now permitted before the first appellate authority as well as the before the tribunal. Timeline to file the appeal. So it is in case of commissioner appeal, it is 3 months plus 1 month of condonation. SESTET, it was 3 months. There was no specification about the condonation. Now under the GST, there is a specific provision for the condonation of the delay, which is 3 months. As far as the rectification is concerned, so there is no specific provision as far as the order passed by the first appellate authority. Earlier it was 6 months, now it is 3 months. Adjournment, it is discretionary before the commissioner appeal and the pre-GST era. Now it is officially 3 times maximum can be granted to a party. Additional evidences limited with the reason recorded can be permitted before the first appellate authority, allowed in certain cases in pre-GST regime. Now it is there are specific provision for submission of additional appeal. We will discuss in detail at subsequent slide. Enforcement of the order. This is now the new thing which is very welcoming aspect. So friends, when I'm talking about the enforcement of the order, so earlier these powers generally lies with the civil courts, wherein if any order, favorable order is passed by the honorable bench and that has not been executed, say refund is granted but the department is not sanctioning the refund, then the only remedy available is to approach the civil courts. Now under the GST, the power of civil courts granted to the tribunal, so they can also act for enforcement of the order passed by them. We'll discuss it later. Sitting hours, yes, this is the sitting hours. Monetary limit for filing the appeal, yes, so now the monetary limit has been reduced as comparative to the pre-GST regime. Judicial status, so commissioner appeal is largely an administrative authority and both the tribunals are deemed judicially proceedings. Now, when we are discussing about the qualification of the members are concerned, so it is now on a higher side, the members, the president and the vice president of the bench, earlier comparative to earlier, now has to be have the superior position. It has to be a judge of Supreme Court or Chief Justice of a High Court. So in the scale of seniority, this time it has been increased. Now moving towards the next aspects of time limit for filing the appeal, it is very crucial to understand that it is, so when we are talking about the appeal procedure, so we need to understand, and court time and again has held that appeal is a statutory right. It is not a inherent right. So in case if you are aggrieved with any order passed by authority, subordinate authority, and you wish to file an appeal, then that appeal is subject to the provisions prescribed under the law. It is a statutory right. Therefore, it is subject to fulfillment of all the conditions attached to it. In case if these conditions are not fulfilled, then your statutory rights shall be go away. Therefore, adherence to the time limit for filing the appeal is of utmost importance. Section 112 says that any aggrieved person, so please note the term here is any person. It does not says the registered person. So any person could be a consumer as well, or the buyer who borne the incidence of tax in addition to what is supposed to be paid. So that person is also eligible for filing the appeal. Person aggrieved by an order passed against him. So he has to be a person, he has to be aggrieved by an order passed against him. So it cannot be any person who is not aggrieved by an order. Say, for example, in case of a real estate transaction, the builder has transferred a flat and subsequently it has been cancelled. Now the builder seeking the refund of the same, and the refund has been denied, stating that it is not eligible to you. So therefore the refund cannot be granted to you. Now, since because the tax incidence has already been passed on to the consumer, and due to unjust operation of principle of unjust enrichment, you cannot seek the refund from the department. Hence, your application is rejected. Now, since the incidence has been borne by the buyer, so he wished to seek the refund in this case. Now, the question arises: can the buyer file an appeal for seeking the refund? So here the answer lies. It says person aggrieved by an order passed against him. So here in this case, the order is passed against the builder, not against the buyer. So buyer cannot say to be a aggrieved person. Therefore, buyer cannot file an appeal. If he wish to seek the justice, he may file a fresh application seeking the refund, subject to the time limit available to him.
Gopal
Then
sir,
it further says, yes sir.
the screen is not visible.
Okay.
So I think it is you have to reshare this screen.
Okay. Yeah, hope it is visible now. Yeah.
Yeah, it is now there.
Good to go with. Yeah. So it says there is a judgment also, Rohit Pulp, under previous GST regime, which talks about that only the aggrieved person has the locus standi before the court. And now the time period which has been given is the 3 month. So 3 month has to be understood as a British calendar month. It need not to be replaced with 90 days. So in case if the order is passed on 1st of January, the last date for filing the appeal is the 31st of March. It is the 3 calendar month. Maybe the 31st March could be 89th day or 91st day. Irrespective of that, 3 month has to be considered as a calendar month from the date on which the order is communicated, not the date when the order is passed or order is signed, but the date when it is communicated in the manner as prescribed under section 169 of the CGST Act. Section 169 provide the various mode under which a notice can be served, or the date as may be notified. So as of today, no date has been notified by the government. So this is an example. Rule 3 of the GST 80 procedure rules 2025, wherein it has been stated that Now it is like what I have experienced. So while drafting this procedure rules, they have taken into the consideration on the smaller issue which were earlier becoming the reason for the litigation. So they try to make it as extensive as possible and try to reduce the possibilities of litigation on the smallest issue. So they have made it clarified that the date of communication order shall be excluded. It won't be considered. So suppose if it is served on first will not be considered for the purpose of time limit of 3 months. Similarly, it is also been stated that in case if the last date for filing the appeals is an holiday, then that period shall also be excluded. So 31st March, if it is a holiday, then 1st of April will be considered as last date. Now, under this e-era, when the guideline has been set to file an appeal online, so where this provisions really matters that if it is holiday, then the next day shall lie. Earlier in previous era, when appeal is to be filed manually, then due to the holiday, one could not file the appeal. Now this has been there, and interestingly, this has been stated into the rule, not anywhere in the section. So when the principal legislation does not have any certain provisions and the subordinate legislation has this provisions which is in ultra virus of the principal legislation. So how does it matter? So suppose for me, like it is a beneficiary provisions. So if I skip the day, so I am getting an additional chance for filing the appeal by one more day or whatever the period. But in case of a department appeal, they may exercise. So they may file an appeal extending the extended period as per this rule 3. That time it can be challenged before the court that this rules is in ultra virus to the provision of the act. So therefore this extended period should not be invoked. Condonation of filing the appeal, it is 3 months in case of taxpayer. In case if department wishes to file an appeal, then it is again 3 months, and in case of cross objection, it is 45 days for period of condonation of delay. Now this is very important provisions. Who is the authorized representative who can appear before the tribunal and represent their client? So section 116 states the list of the persons who is qualified to appear before the authorities, which is a relative or regular employee, practicing advocate in India, CA, CMS, CS holding COP. So it is important to note that if in case if you wish to present before the tribunal, then holding a COP is a mandatory requirement. So a chartered accountant who does not have the COP cannot appear before the tribunal unless he is an employee of appellant. So in the capacity of employee, he can represent his employer, but not otherwise. And retired tax officer and GST practitioners can also be appeared before the tribunal. And again, subsection 3 states about the disqualification of the person who can't appear before the tribunal to represent their clients. There are certain few non-appealable orders which cannot be appealed before the tribunal. So these are the one of the transfer of proceedings when the matter is transferred from one officer to another officer. So these order, if we are not convinced or we agreed with that it cannot be transferred to that jurisdiction, then appeal in that matter shall not be lie before the tribunal. Seizure and retention order which has been passed by the commissioner for seizing the document of the assessee, then again in that case the appeal cannot be lie before the tribunal. And sanctioning a prosecution under this act. So supposingly a commissioner has sanctioned a prosecution against a person, so appeal against that order shall not lie before the tribunal. Reason being, the prosecution powers coming from the CPC CRPC Act, and the appropriate appellate authority in that case is the civil courts, not the tax courts. So therefore, appeal cannot be lie before the GST 80. Any order which is passed again under section 80, which is for seeking the relief in payment of due and admitted tax liability in installments. So if the relaxation is not being given by the commissioner, then same cannot be appealed before the tribunal. Monetary limit for filing the appeal. So this limit, please note, has been prescribed for the department, not for the assessee. For assessee can file limit without any monetary limit. So the limit for the department is 20 lakh rupees, which was earlier 50 lakh rupees. So it has been come down. And there are certain exception as far as the monetary limits are concerned. Just a minute, I think the screen has gone. Let me reconnect this. So there are certain exception of the monetary limit wherein the appeal can be preferred before the tribunal irrespective of the monetary limit. So when the matter related to a constitutional question, when any provision of the GST Act is ultra vires to the articles of the Constitution,
Gopal sir, screen
and
is not.
Vijay, can I have shared? It appears that there is certain network error. So in case I have shared the PPT in the group, so if that can be shared
Okay.
at your end, then
Yeah.
we can manage.
Okay,
Please.
I am trying. Yeah. You may continue. I am trying.
Yeah, please. Yeah, so we were discussing the exception of the monetary limit. Again, the second exception is when the rules framed under the GST Acts are ultra vires to the provision of the Act, then the limit will not apply. Similarly, when any circular notification is or any order is issued which is again ultra vires to the provision of the GST Act and the GST rule, then this monetary limit shall not applicable. And any other case where the board deems it necessary in the matter related to classification, valuation, place or supply, then this monetary limit will not apply. Again, Rule 18 provide specific provisions related to filing an appeal. Now it is very interesting. We have experienced how the department is functioning. So we have experienced certain cases wherein multiple original order has been issued for one show cause notice, and for all these multiple orders we have filed a separate multiple SCN has been issued for the same financial year, multiple submission has been made, but a single order in appeal has been passed. So in such case, since the OIO is one, how many appeal has to be filed? Rule says it has to be separately filed for each OIO, not the OIA. So there are 5 adjudication order. 5 appeals shall be preferred before the tribunal, not the one against the OIA. I don't know how the portal will function presently. What we have experienced that when we are making an appeal, then from the drop down, we need to select an order against which we are preferring to file an appeal. So now how this portal will function, it has to be tested with the time. Again, there is a provision in case when a single OIA has been issued for multiple aggrieved person, especially in the case when NGTPT case, where non-genuine taxpayers, then a common order has been issued for all the taxpayers, attaching an annexure mentioning, specifying therein the name of all the concerned parties. So in that case, there is a provision that no consolidate appeal shall be filed. Each aggrieved party has to be filed a separate appeal before the tribunal. Rule 18 and 20 governs the appeal format of appeal, content and format. So when practicing before the courts and tribunal, so tribunal is largely a courtroom setup wherein the bench sit at the front, then there is a department, and it's open courtroom setup which govern through largely the procedure set for the civil laws. So they are very inclined to have a they are very particular about the structure, fonts and everything. So this has to be kept in mind that what the preparation of the documents again would be a task, so that has to be checked carefully. So a specific rule has been framed regarding these aspects. Cause title, like in case of in the GST appellate, the matter is preferred before the tribunal, so these kinds of wording has to be there. Paragraph number, clear structures, it has to be typed clearly, it cannot be written manually, it has to be on A4 size paper, no more legal green paper is required, in double spacing, dual page index, tag, everything has to be there. So though they are inclining to go online, so this may be so there are provisions that in case we'll see later in the rules that in case where appeal could not be uploaded online for any reason, then registrar by an order can authorize a person to file an appeal manually, but that would be in very limited case. Largely it will be online. In few cases it could be offline. When the appeal is filed offline, then all these rules are required to be adhered with. It has to be signed and verified by the appellant and authorized person, certified as a true copy. So certified copy of the order, we have experienced that this become a very important aspects when which order has to be submitted along with the appeal. So previously the provisions were very rigid. It has to be signed by the officer who has passed the order, and different state has different practices, central has different practices, and practices vary from state to state. Now under the GST, specific provisions has been made which says that in case if order has been uploaded online, then any appeal filed online, provisional number shall be generated immediately, and that shall assume be the date of filing the appeal. In case where the OIA, order in appeal, has been issued offline, it has been issued manually, in that case a self-certified copy of the order has to be submitted before along with your submission. So this self-certified copy, it can be self-certified either by the assessee himself or authorized representative on behalf of the assessee can file this self-certified copy, can sign on the order and submit along with the documents. Pre-deposit requirement, section 112 and 8, it is very important. Section 112 categorically states that no appeal shall be filed under subsection 1 unless, so I'm emphasizing on the word unless, the appellate has paid. So unless denotes it is a mandatory requirement. If so, as we discussed, that appeal is a statutory right, not inherent right. Whenever a statutory rights has been given, it is subject to all the statutory condition attached to it. So it is stated that it is mandatory requirement to pay the pre-deposit before filing an appeal. If it is not paid, then appeal will be rejected. The quantum of appeal, for admitted amount, it is the full amount, and for the disputed amount, it is 10% of the disputed amount. In case where the order is issued only for the penalty, then 10% of the penalty quantum. However, there is a capping of 20 crores rupees which is very welcoming provisions. Earlier there is a case in Karnataka in case of some gaming company. The tax demand was huge. It is more than the turnover of the company, somewhere around 22,000 crores rupees. 10% of the debt amount is larger than the total net worth of the company. So considering that harsh provision, that requirement has been relaxed now to certain extent. Does the tribunal has power to waive the pre-deposit? So earlier there lies some power. Now under the GST regime, there is no power with the tribunal. It is a mandatory requirement. Now, in case where the assessee is unable to pay the pre-deposit quantum certain time because of his financial condition or for say any other reason, then what the recourse available with the appellant? Recently we have dealt a case in case of cooperative housing society. Huge demand was raised and the pre-deposit they were unable to pay the pre-deposit amount. Therefore, no remedy available with them to contest their matter. So what the remedy available in case under the GST before the tribunal, as we seen that no relaxation has been given. But however, considering the circumstances of the cases, a decision could be made or a strategy could be framed that a writ could be filed before under Article 226 of the Constitution before the High Court. High Court may not accept the prey solely on the ground that seeking waiver in case of pre-deposit because it is a mandatory condition. However, High Court has the vast power they can consider, but in that case, the other grounds has also been made to admit your case before for the hearing. So only for sole ground, it is least likely to be accepted. Though the High Court has various immense power, it depends on the judges, the overall the precedents has been set. Various factor works before the High Court. Therefore, in such case, a proper strategy has to be made, and accordingly, action should be taken. Next is, can appeal be rejected for non-payment? So, yes, appeal cannot be rejected merely for the non-payment. An opportunity should be given. There was a settled principle. But ultimately, when it is a mandatory condition, after the hearing, there left no ground for convincing the bench that for what reason, whatsoever reason, we were unable to make the payment of pre-deposit. Can the appeal be restored if deposit is made late? So before hearing, at the time of admitting the appeal, pre-deposit could not be made, but later on it has been made. So whether appeal will be valid? So yes, previous GST regime, it is valid. There is a case law, but however, under the current GST regime, it is strictly no because the section, the provisions are worded in such a manner that it is a prerequisite. This is very important question, pre-deposit from the credit ledger. So if we, these questions disputed over a time, various high courts throughout the countries had divergent view. Some says it is applicable, some say it is not. It can ITC cannot be used for the payment, and the reason being that the section 46 says that ITC can be utilized for the payment of output tax liability. And as far as the pre-deposits are concerned, it does not partake the character of tax. It is the liability is not yet decided. It is under disputes. It may be crystallized. It may be waived off. So till the time proceedings are concluded, it cannot be considered as tax. And as per the provision of Act, ITC can be utilized only toward the payment of output tax liability. Since pre-deposit is not an ITC, therefore there is a barring into the Act. However, courts throughout the country, high courts has a divergent view. Gujarat High Court in case of Yasho Industry Limited has stated yes, ITC can be utilized for payment of pre-deposit. Again, there is a circular 172 which also states that pre-deposit is permissible through ECL. Now the Gujarat High Court judgment has been upheld by the Supreme Court. So this is very welcoming and relaxing provisions. So wherein the Supreme Court has allowed to make the payment of pre-deposit by utilizing the credit balance. Next slide, please. Appeal filing fees. So, Vijayji, can you come down to next slide? Appeal filing fees. Next slide. Yeah. So appeal filing fees has been prescribed as 1% of the tax amount, disputed tax amount, subject to minimum of 5,000 and maximum of 25,000. And in case where is no tax is payable, then a fixed fees of 5,000 shall be payable in such case. And and it would be double in case of C and S, so it would be 10,000 and 50,000 rupees. Now, in this example, where the demand has been raised for both the CGST and SGST. So, in first scenario, we'll see that the total demand raised is for 2 lakh rupees, one CGST, one SGST. The calculated fees is 2,000 rupees. However, the maximum minimum rule will apply, and final fees would be payable as 10,000. In second scenario, if we see it is 14,000 rupees, 1% of the tax disputes amount. Since it is above the minimum, 14,000 will be payable. In third case, where the calculated fees is 60,000 rupees, however, it would be subject to the capping of maximum fees of 50,000. Therefore, 50,000 would be payable. In case of IGST, it would be payable so again it is not clear under the law that it has to be double of the amount or only the 5,000. So the minimum and maximum limit would be double or it would remain the same. And similarly, in case where the demand is comprising of all the three tax elements C, S and I, in that case again it is unclear as of now whether all three under all the three act it would be leviable or it would be payable as the double of the fees prescribed under the CGST Act. And next. So we have experienced that due to non-constitution of the GST Acts, there are certain provisions which attract the recovery provision under section 78. So as section 112 states that appeal has to be filed within 3 months from the date of communication of the order by the appellate authority. In case if the appeal is not filed within the granted period, then it would be assumed that assessee is not wish to prefer to file an appeal before the appropriate appellate authority and the recovery proceeding would be initiated. Now, in the absence of the tribunal, the assessee, even if he is willing to preferred an appeal, but he is not able to file an appeal because of non-constitution of the appeal. So, therefore, an interim relief in 2019 has been issued, which states that the 3 months period would be counted from the date of communication of order or the date on which the president of the appellate tribunal shall enter into in office. So we know that the president has entered into office in the year of 2003. The clock starts from there. Then again there is an anomaly because the rest of the state benches were not constituted. Therefore, again the section 112 has been amended, which has been stated that any date notified by the government based on the council recommendation, that shall be date will be considered for computing the 3 months time limit. And this is the time limit, and to safeguard the recovery proceeding, circular 224 has been issued under the central provision, and in Maharashtra it is circular 9T and 22 has been issued, which says that in case if you wish to represent or appeal against the order before the appellate tribunal, then you need to make the payment of pre-deposit and file a declaration before the appropriate authority that you would prefer to file an appeal before the tribunal. In case if this procedure is skipped, then it shall be assumed that you are not willing to proceed your case before the tribunal authority, and recovery proceeding would be initiated accordingly. And there are certain DRC 03A were there that portal were not supporting for making the payment of pre-deposit. So accordingly, clarification has been provided in Circular 224. Now, this is very important. Production of additional evidence. Rule says that it is not permitted to admit additional evidences during the proceeding. Therefore, it becomes very important that from the very first level, at the stage of adjudication, all the relevant documents which are necessary for your case has to be submitted, because later you will not be permitted to make an additional evidences. There are exceptions to these rules, but those all exceptions will be on the mercy of the bench. If they permit so, there are certain scenario wherein the bench may permit you to adduce additional evidences, but it is not your as a matter of right. It would be the discretion of the bench. Okay, so the time is the triggered for concluding the session. So I'll share my presentation, which can be referred for the remaining procedural aspects. Now, for this next session is ahead, so we'll not go into the much detail. In case if the participants has any question, they may ask, and accordingly we can proceed further. They can either type their question in the chat box, or as the moderator suggests, it can be.
Yeah, thanks a lot for the wonderful session. Now it's time to question and answer session. Gopal sir, I have received some question.
Yeah.
I am reading out here. The first question is from Bombay. When GST Tribunal will be activated?
Okay. So it is like now the tribunal has been constituted, the member has been appointed. Again, the infrastructure would be required. So all these are internal issues. We can just make a speculation. We cannot authoritatively say the specific date when it would be operational. However, there are the emerging view that especially in the state of Mumbai, in the state of Maharashtra, Mumbai, it is likely to be operational between October to December.
Okay, okay. And another question is from Barsana. What are the prerequisites of CA to practice as a GST Appellate Tribunal practitioner? What are the pickups and procedure to start a CA can practice wisely for a tribunal?
Yeah, very nice question. Like it is the question of most of the previous session I have attended. So there is no SS thumb rule, but the few things I would like to share with the participants, that it is not like the regular proceedings wherein the courts, the tribunal are very keen to the civil courts procedure, and they put very emphasis on the procedural aspects. As I have discussed, there is specific rule about the dress code. So you have to be in proper dress code. You need to learn a lot. You need to understand how the paper booklet will be framed. What is the judge's expectations? You also, apart from your factual background and the legal knowledge, you also understand the various other aspects, like what are your strong points, how to present your case, your vocabulary, your command over the subject. All these things matters a lot. So for the beginners who wants to start their career in the litigation stream, one humble suggestions would be they start visiting their nearest benches, go there and observe the others thing. Like it is very costly to learn from your own mistake, whereas it is attracts no cost learning from the others mistakes. So you observe what the terms are being used. They do not appreciate to term them as a sir. The decorum is to address them as a honor or your honor. So all these things need to be observed there, and accordingly, slowly, or if you are fortunate enough, seek the assistance of the senior in the profession. So all these things could help you to gear up for this profession. And mind well, please, this is very great opportunity which is ahead of you. So prepared well for this thing.
Okay. The another question is from Kolkata. appeal against the refund rejection was filed beyond the time limit of 3 months, and that was too rejected because of the delay. Can now appeal be filed with the GSET?
See, again, it's the statutory time limit given under the rules. The law is very strict, so you cannot go beyond the statutory time limit. However, in such case, writ jurisdiction could be explored. And as I stated earlier in my presentation, that only on the ground of pre-deposit or condonation of the delay. So there are under the pre-GST era, there are specific judgments which bar from jumping the statutory time limits, which is mandatory to be adhered with. In case if that has been skipped, then you need to strategize your case in such a manner that since the High Courts under Article 226 has immense power, so they can go sometime beyond the law. Even under the present regime, we have experienced that there are certain citations which will help you to take your matter before the courts. Yes, you should explore the writ jurisdiction, but such that it is the timeline is must.
Yeah, another question on the same line. First appeal was dismissed. So what is the remedy today, whether we should go for the SC, because there is no tribunal functionally. So we should go for the High Court, or we should wait for the tribunal, and what should be our prayer in the writ if we go for the High Court?
So here the facts are not clear to the extent that on what ground the first appeal has been rejected. So what was the reason for rejecting the first appeal? Accordingly, strategy could be framed for the available remedies. So that need to be answered first. So various 2-3 points we have already discussed, that non-deposition of pre-deposit, delay filing in the appeal. So if those are the reasons has already been discussed, and for the remaining reasons we need to understand the fact.
Okay. So now there is no question. Thank you so much, Gopalji, for such a clear and insightful presentation. As we conclude this enlightening session on GST Appellate Tribunal, I take this opportunity to express my heartfelt gratitude. First and foremost, I extend my sincere thanks to our distinguished speaker for sharing their valuable insight on such a crucial subject. The clarity they have provided on the procedure, structure, and practical challenges of the upcoming GST Appellate Tribunal will surely guide us as professionals in the time ahead. With these words, I once again convey my gratitude to the everyone and look forward to more such enriching deliberation in the future. Thank you, Gopal sir. And now it's time to start the second session.
Thank you, Sasha. Thank you all the CP committee and the members for your patience listening. I'm grateful for the time devoted to me. Thank you.
Thank you so much, sir.
Now moving to our next technical session. As we all know, the Income Tax 1961 has served the nation for more than 6 decades, but over time it became voluminous, complex, and heavily litigated with changing business environment, global practices, and the government vision for easing compliance and transparency. A new law was need of the hour. That's why the Income Tax 25 was come into the force, and this Income Tax Act 2025 seeks to bring simplicity, rationalization, and technology-driven compliance while addressing long-standing issues faced by the taxpayer and professionals. This session will help us to understand not only the key provision of and reforms introduced in the new act, but also their practical implications for businesses, individual, and the profession in large. I am confident that today's deliberation will give us some clarity to road ahead, and prepare us as professionals to effectively guide our clients and society in this new tax regime. For that, we have with us CA Prakash Parwalji from Jaipur, an eminent tax expert who has been closely studying and guiding professionals on direct tax reforms. His CA experience span across more than 4 decades in domestic, corporate, and international taxation. He has been regularly appearing before Jaipur, Jodhpur, and Delhi bench of Income Tax Tribunal, before Interim Board of Settlement Commission. He has been in position like that and co-opted member of National Executive Committee of All India Federation of Tax Professionals. He has handled income tax search and survey matters and corporate taxation of various companies in public and private sector. He has been a regular speaker on budget, talk, direct tax, accounting standard, and core capacity building program of the Indian Revenue Official. With this great pleasure, I invite CA Prakash Parwal sir to address us. Over to Prakash sir.
Thank you, Vijayji.
Thank you, sir.
And my co-speaker, Gopal Kedia ji, Secretary of CPE Program Committee, Ginni Gupta and all my participants. Friends, today I have been given a subject which is very, though the Income Tax Act is very old, but this new Income Tax Act 2025, it is just born. It is only 6 days old, because this new Income Tax Act 2025 was passed by the President on 21st of August 2025. So we would be discussing this topic today. And before taking up this topic, I would just like to share first that what are the history of the income tax legislation in India. So with this brief background, I may start my presentation that what is this new Income Tax Act and what is the key features of this act, what is the legislative history, and what are the key changes which we must take note of. So friends, the first issue that we would be discussing is that what are the key things in this Income Tax Act, in a very short and lucid manner, how we can say that how this 2025 Act is different from 1961 Act. So if we go to this Act, the intention for this Act is to make the law simple. You must be reading the 1961 Act, too voluminous, number of provisions, number of explanation, then explanation against explanation. So what has been done in this 2025 Act, that law has been made in a simple language. So first is that the law has been made simple, it has been made straightforward, with a purpose and intention that how we can reduce the litigation by making number of interpretation to the words used in the present act, and whatever are the redundant provisions, they all has been removed from this 1925 act. So this act received the assent of President on 21st of August 2025. This bill received assent on 21st August 2025, and now it would be known as Income Tax Act 1925, and it would replace the Income Tax Act 1961. And this would come into force from 1st of April 2026. So the first tax year would be 26-27. I would also explain in the subsequent slide what is the meaning of tax year and how it is different from previous year and assessment year. So that will be discussing in the subsequent slide. Now if we go to the history of the income tax legislation in India, then first in 1860, the Income Tax Act was introduced by Sir James Wilson, and the purpose of that was to fund the British Empire expenses. Then in 1886, a comprehensive Income Tax Act was introduced for taxing income from property, salary and profits using progressive rates. Then 1922, this was the first Income Tax Act under the modern framework for taxing the income, introducing tax rates, exemptions and deductions. So the participants who are present here, they must have heard about 1922 Act, earlier 1860 and 1886. I don't think anyone would be remembering what were those acts, but of course we have a few instances or a a feel of 1922 Act. Then came the 1961 Act, which replaced 1922 Act. And this 1961 Act, it was has a more systematic approach to tax assessment, collection of taxes, then international taxation and transfer pricing. All these provisions are contained in 1961 Act, which we have been practicing right now. But this 1961 Act also was amended from time to time, and as per the report, this Act was amended around 65 times, and there has been more than 4,000 amendments. And because of that, there has been a discussion to modify or replace or amend, how to make it simple and straightforward. That has been in discussion right when P. Chidambaram was the finance minister of the company, and at that point of time, he placed a direct tax code 2009, but that direct tax code never seen the light of the day. It was dropped as such. Then in 2019, a committee was constituted to give suggestion to modify this act, but that also did not move forward. Then the finance minister, in his budget speech after the third terms of Modi government, so on 23rd of July 2024, when he placed the finance bill in the parliament, he stated in the budget speech that they want to make a comprehensive review of Income Tax Act 1961 to make the act concise, lucid, easy to read and understand, in order to reduce disputes and litigation and providing tax certainty to the taxpayers. And she also gave a time limit that this proposed amendment or proposed review would be completed in 6 months' time. So a positive step was taken in this budget speech that they would make this law reviewed within 6 month time. So after 23rd of July 2024, then came 1st February 2025. So this is the budget speech of the second budget speech of this new government, which where she again mentioned that this new Income Tax Act, which they plan to place on record, that would be clear and direct in text and will be close to half of the present law, both in terms of chapter and word. It would be simple to understand for the taxpayer, tax administration, and it would lead to tax certainty and reduce litigation. And in that backdrop, the Income Tax Bill 2025 was presented in the Lok Sabha, and it was tabled on in the Parliament on 13th February 2025. Now, this income tax bill, it was placed on the public domain. Suggestions were invited from the public, and the bill was sent to a select committee to submit its report. Now, the select committee, after obtaining all the suggestions from the various stakeholders, including our institute, and institute also worked a lot for giving suggestions to the Income Tax Bill 2025. And after considering all that, the select committee submitted its report on 21st of July 2025. And this report contained more than 280 recommendations, out of which 32 recommendations were significant recommendations. But then the government withdrew this original bill on 8th August 2025 in the parliamentary session which just concluded. So there, that bill was withdrawn, citing the need to incorporate committee suggestions and avoid confusion for multiple versions. So what was done here done is that this revised version is titled as Income Tax Number 2 Bill 2025, and it was introduced and passed by the Lok Sabha on 11th August 25 and by the Rajya Sabha on 12th August 1925. And thereafter it received the assent of the President on 21st of August 2025, and it has now become Income Tax Act 1925. 2025. Income Tax Act 2025. So now it is certain that from 1st of April 2026, this new Income Tax Act 2025 would replace the existing 1961 Act. So this is how this Income Tax Act 2025 has traveled its journey as of now. Now, if we go to the entire structure of the 2025 Act vis-a-vis 1961 Act, in terms of words, the present Act of 1961 contains around 5,12,000 words. It has reduced to 2,60,000 words in the 2025 Act. Now, the present Act contains 47 chapters. It would be reduced to 23 chapters. Now, number of sections, though it is 298 in the present Act, but if we go by section which is numbered, say 115 JA, JB, JC, like that, it is 819 sections. Now the sections would be reduced to 536 sections. Now there are 18 tables in the present Act. Now most of the things has been tabulated in the new Act. So the tables are now 57. Now there are 6 formula in the present Act. Now it would be 46 formulas in the 2025 Act. Now there are 14 schedules in 1961 Act. There would be 16 schedule in 2025 Act. And number of pages which are at present 823 pages, that would be reduced to 622 pages. So these are the structural changes which has been given in this slide for a glance view. Now present Act, which contains about 1200 provisions and 900 explanation, they have been removed, and those provisions and explanation has been incorporated in the 2025 Act as subsection or sub clauses, and their content is also simplified. So this is how there are the structural changes. Now if we further go into the number of amendment which has reduced the number of pages and number of words. So if we go to the 3 topics, one is the exemption related provisions. Now presently the exemptions are contained in section 10. So there are around 30,000 words in this present of 1961 Act. Now these exemption related provisions has been now taken to the schedule, and the words has been reduced to 13,500. So there is a reduction of 16,500 words in exemption related provisions. Similarly, for TDS and TCS, presently there are 27,453 words, but in the new Act it would be 14,606 words. So there is a reduction of 12,847 words. Now NPO taxation. So NPO taxation is the most complex taxation in 1961 Act as of now. Now that has been the taxation of charitable trust and institution, that is now named as non-profit organization. So there the words is reduced to 7,600. So 5,200 words has been reduced. So these are the structural changes which has been made in the 2025 Act. Now the first important thing which we must learn, actually from 1961 Act, what we have till date learned, now you are to unlearn, and now then after unlearning all those things you are to now relearn. So you are to relearn that what is this 2025 Act special features. Most of the provisions of 61 Act and 2025 Act, they remain the same, except that that has been simplified, that has been made by way of sections and subsections instead of proviso and explanation. But 2-3 new concept has been introduced. So the first of such concept is the concept of tax year. Now this tax year has replaced the previous year and assessment year. Now there has been a lot of confusion when we talk from our client or the accountant of our clients to give books of accounts. So you always have to mention, suppose you are dealing with assessment year 24-25. So you have to specify to your client the detail which you need is of the previous year. That is, if it is assessment year 24-25, it would mean financial year 23-24. So that was causing a lot of confusion. So now that has been removed by replacing previous year and assessment year by the concept of tax year. So the tax year would be the same, which is the current year. So a tax year is a period of 12 months contained in a financial year. So if we go for filing a return for financial year 26-27, so the financial year 26-27 is your tax year. Your assessment would be also of that tax year. It would not be that for 26-27 we would say now it is assessment year 27-28. You are not to do that. Now financial year and tax year would coincide together. So any assessment of tax of your total income would be done for a tax year, but a tax year can be of a period less than financial year also, and that situation may arise when you have a income generation activity during the mid of a financial year. Suppose you have started a new business in the month of say June 2026, then your tax year for 26-27 would be from 1st of July 26 to 31st of March 27. So it would be like that. So it can be for part of the year. The tax year can be less than a financial year also. Now the tax year for 26-27 of the new act will pertain to the income of the financial year 26-27, and the rate of tax would be also for that tax year. It would not be for the assessment year, it would be for the tax year. But along with the tax year, a concept of financial year has been retained, and that financial year is for the purpose of compliance for timelines and procedural issues. So there would be now two things: a financial year wherever there is something is to be complied with, some procedural issues, the financial year would be there. But whatever would be the your computation of income and everything, that would be now for tax year, which would replace the previous year and assessment year. So this is first concept which we must take note of in the 2025 Act. Now the second concept is the taxation of charitable trust and institutions. Hitherto we talk mostly of taxation of charitable trust or institutions, charitable or religious trust or institution. Now that word has been given a go by in the 2025 Act, and now it is registered non-profit organization. So that we have to unlearn the taxation of charitable and religious trust and institution. It would be now taxation of registered non-profit organization. So if we look to the new Act of 2025, now all these provisions relating to charitable trust and institution, which are presently scattered across the multiple section, and if you have been dealing with the 1961 Act. So starting from, you have a definition in section 215 of the charitable purpose. Then you have a definition, you have a exemption clause of section 1023C. Even 1023C have subclause 1, 2, 3, 4, 4A, 5, 6, 6A. So number of subclauses are also in 1023C. Then 11 to 13, taxation of this charitable trust institution. 12 by 12 AB, that is for registration. 115 double BC, that is for taxation of anonymous donation. 115 TD, if your registration is cancelled, then what would be the repercussion? So all these provisions were scattered across the various chapters of the Income Tax Act 1961. Now they all have been clubbed together and placed in chapter 17B of the present of the new act, and the sections are 334 to 355. So almost in 21 section, the entire charitable, the taxation of charitable trust and institution, which is now renamed as registered non-profit organization, that has been consolidated. Now, in the present 1961 Act, there are two provisions for registration. One is a provision for registration and another is a provision for approval. So whenever you want to take an exemption under section 1023C, you are required to take an approval from the commissioners, concerned authorities. But if you want to take a registration or you want to register yourself in section 11 to 12 provisions, then it was a registration. But in the present 2025 Act, now it would be only registration, whether it is in relation to 1023C or section 11. So it would be only registration. The approval word has been taken out in the 2025 Act. Now then, this section 334 to 355, this chapter 17B, that has been divided into 7 subparts. And that subpart has been identified as one part is registration, second is how the income is to be computed, what is commercial activity, what is compliance, what are violations, what is donation. Now for donation, if you want to get yourself registered for 80G5, present 80G5, now there presently also it is approval for 80G5. Now it is approval under section 133 1B Roman 2. So the donation approval is contained in section 133 of the 2025 Act. And the last is interpretation. So that has been subdivided in different parts. So the net effect is that the language has been simplified, the law has been made concise. It would have only 7,600 words as against 12,800 words in the present 1961 Act. And two important things which you must also know, that two provisions has been done away with. The first provision which has been done away with is the provision relating to capital gain taxation. And second is about deemed application. Now why so? The first is for capital gain, the reason given is that whenever you acquire a capital asset, it is allowed as an application of income. So even if you sell a asset, you have a capital receipt on sale of an asset. Now you again make an application to another capital asset, or you put it in the FDR or in the bank deposit. They all are considered as utilization of capital gain in the present 1961 Act. So it was found that it served no purpose to have a provision relating to capital gain, because whatever receipt is there, either you would acquire another capital asset or you make investment in FDR or specified modes of 11.5. So considering that this capital gain provision relating of section 11.1A at present, that has been done away with. Similarly, there is a concept of deemed application in the present 61 Act. Now, what is this deemed application? This deemed application is, suppose for the particular year you have earned some income, it has accrued to you, but you have not received it. So there was a concept of a deemed application, that you can move an application to the AO in form number 9, and you can ask the assessing officer that this amount which I have not received during the year, it should be considered as deemed application during the year, as I would apply it in the subsequent year. Now this has been given go by for the reason that already there is a provision for accumulation of income up to 5 years. So the legislature thought it fit that if you are not able to apply the income for the reason that is received during that particular year, you already have an option to seek accumulation of income under section 11(2) in the present act. So that has been retained in the present act also. So they mentions that this deemed application has been done away with, and instead of that you can make an application for accumulation of income for in the subsequent year, and that application, which is presently available for 5 years, is continued in the 2025 act also. And then wherever you want that whatever voluntary contribution or other income is of trust and institution, the mode of investment is specified in section 11(5) in the 1961 act. So 11(5) mode of investment has now been replaced in schedule 17 of the 2025 act. So there is no section like 11(5) in the 2025 act. It is replaced by schedule 17. So whatever is the mode of investment in which the fund of a non-profit organization should be invested or deposited, that is now taken in schedule 17. So these are the changes which has been made in the NPO organization. And if we go to a pictorial view of what are these changes, then this is mentioned here. Now present provision is scattered in various chapters. Chapter 1, we have 215 proviso, section 215. Then chapter 3, which is exemption section, there is section 1023C, 11(1) and all that. Chapter 6A, we have section 80G. Then chapter 12, we have 115BBC and 115BBI. And chapter 12EB, that is taxation of accredited income, and then 15 TD onward. So these are spread over so many chapters. Now all these has been clubbed in chapter 17B in the 2025 act, and they have been subdivided in 7 parts. The first part deal with registration, second part deal with the taxation of the income of non-profit, registered non-profit organization. Third is about commercial activity, how the commercial activity, if any carried out by such non-profit organization, how it would be dealt with. Then fourth is the compliance provision. Fifth is the violation. Whenever there is a violation, what are the conditions when it would be considered that you have violated the terms and conditions. Then approval for donation and interpretation. So this section 3, all these sections of 334 to 355, they have been summarized in 7 categories. And the reason for all these things is they would make the law simpler, more easy to read, and they have been demonstrated through tables that how the registration is to be made. For that, the table is given, what is the income and what would be the tax rate for which a table is given, how the accredited income, tax on accredited income would be computed. For that, a table has been given, and redundant provisions has been removed. So these are how the non-profit organization taxation has been incorporated in chapter 17B, containing those 21 section of 334 to 355. Now next is the changes made in the exemption sections. Now presently we know that exemptions are contained in section 10, 11 and 12. Rather, I would say these are from section 10 to section 13B, because donation to political party is also a part of exemption provision. But basically all the exemptions are there in section 10. And section 10 starts from section 10(1) and it goes up to section 1048. And presently, those exemption sections contain 30,000 words. Now, what has been done? Those section 10 is now means amended to section 11, and section 11 has been incorporated in 6 schedules, and those schedules I have mentioned in this slide. So, whatever exemptions are there in section 10, all those exemptions that has been incorporated in schedule 2, schedule 3, schedule 4, 5, 6 and 7. Now how those schedules has been made out? For schedule 2, which contains 17 clauses, it is with reference to income not to be included in the total income. And in this schedule 2, agriculture income, scholarship, payment from approved superannuation fund or NPS fund, or interest on gold deposit bond, they has now been incorporated in schedule 2, 17 clauses with the title income not to be included in the total income. So this income is not to be included in the total income. Now schedule 3, which has 39 clauses, that is income not to be included in the income of the eligible person. Schedule 2 was income not to be included in the total income. Schedule 3 is income not to be included in the income of eligible person. For example, partners of a firm. So share from the firm by a partner is not eligible to be included in the hands of the partner. Similarly, HUF. So any distribution of income by HUF not to be included in the hands of the individual members of the HUF. Now constituency allowance. So constituency allowance is given to eligible person who are MPs and MLAs. So in their hand, this income is not liable to be included. Similarly, capital gain on transfer of agricultural lands, if it is beyond the prescribed limit, then presently it is in section 214. Capital gain, if it is not a capital asset, agricultural land is not a capital asset, it is not liable to be included in the total income of individual and HUF. So that has been incorporated in schedule 3. Now schedule 4 has 14 clauses and it relates to income not to be included in the total income of non-resident. So that has been specifically made for non-resident. So if you are dealing with a taxation of a non-resident person and you want to know that whether a particular income is exempt in the hands of non-resident or not, then you can directly refer to schedule 4, which has 14 clauses, whether that person is covered in any of the 14, that income is covered in any of the 14 clauses or not, and you have an easy reference to work out his income. Now schedule 5 has 8 clauses, and this is income not to be included in the total income of certain eligible persons. So these eligible persons are mainly 3 type of person: investment funds, business trust and their unit holders. So this clause contains the exemption in relation to these persons. Then schedule 6, it has 12 clauses. Income not to be included in the total income of certain eligible person in International Financial Service Center, IFSC. So that is in relation to IFSC eligible person. Then clause 7 has 48 clauses. It is in relation to certain person who are made exempt from tax. So for example, Central Electricity Regulatory Commission or IRDA, Insurance Regulatory Development Authority, or university or educational institution or hospital who are wholly or substantially financed by the government, which is presently in section 1023C Roman 1, 2, 3, 4, Roman 1, 2, 3. So that is now replaced in schedule 7. Recognized provident fund, superannuation fund, gratuity fund. So any income of a gratuity fund or a superannuation fund or a recognized provident fund, that is given exemption through Schedule 8. So this is how this Section 10 exemption has been categorized in Schedule 2 to Schedule 7. And for political party, there is another schedule, that is Schedule 8. So donation by a political party or by a electoral fund, that is now incorporated in Schedule 8. So this is how this exemption provision has been modernized. Now for salary and house property, there is no changes as such, except that the effort is to reduce the number of words, make the law simple, easy to read, give more clarity, so that it is understood by the general person in a better manner. And except that, there is no change as such in salary and house property income. Now, profit and gains of business and profession. Now, in principle, as such, there is no change. But what effort, because of these effort, the number of sections which were 65 in the PGBP head, that is now reduced to 41 sections. Whatever was given as proviso and explanation, that is now converted into subsection. Now, formula-based explanation has been added to give clarity to the complex concept, and the topics which are of similar nature, that has been put at one place. How that has been done? Now, deduction related to employees' welfare. So there are number of deductions which is allowed in computing the total income of a person carrying out business and profession when it is given to the employees or to his welfare. So all those employees' welfare deductions, that has been now incorporated in Section 29 of the new Act, and the language has been made simple. Similarly, the deduction for bad debts and provision for bad and doubtful debts. Presently, we have Section 36(1)(7)(7)(a). So all those 36(1)(8) and 37, all those. So they have now been consolidated into a single section 31, so that one is easy, so that one can easily comprehend and understand how the deduction for bad debts and the provision for bad and doubtful debts would be allowed. As such, there is no change in the allowability or timing of allowability, but those scattered sections has been now consolidated in Section 31. Then other amendments which are relating to PGBP, and we must look into those, is first is that presently we have Section 32 for claim of depreciation. Now this is replaced by Section 33, deduction for depreciation, and this has been made more lucid, more elaborate, and more user friendly. Similarly, there is some changes in the definition of actual cost and written down value, and that is contained in Section 39 and 40 and 41 of the 2025 Act. Now, if you have acquired any foreign asset, any capital asset from a outside country, and that payment is to be made in foreign exchange, and if there is a foreign exchange fluctuation, then how that foreign exchange fluctuation is to be capitalized to the cost of asset, that is now contained in Section 45. Now, deferred revenue expenditure, there are various sections: amortization of expenditure, preliminary expenses amortization, this mining amortization, that has been now changed to Section 44, 51 and 52. The expenditure on scientific research, that is changes has been made in section, means replaced in 45 with certain changes. Now, presumptive taxation of resident. Now, presently we have Section 44AD, 44AE, 44AF. So there were different sections. They all is now contained in Section 58. and there a table has been provided that which person, what condition, and how much is the rate. So presumptive taxations, which is spread over 3-4 section for residents, that is now consolidated into section 58. Similarly, presumptive taxation for non-resident, that is now consolidated into section 61. So this is how this profit and gains and business and profession has been reorganized in the 2025 Act. Now then, deeming provisions. Now, most of the cases in the Income Tax Act, they revolved around the application of the deeming provision, which is contained in section 68, 69, 69A, B, C, and D. Now, the 2025 Act also contained the same provision, but names has been changed and some more clarity has been given. So 68, which is presently named as cash credit, it was causing a lot of confusion to the person who is first time reading the 1961 Act. What is the meaning of cash credit? Whether it is only when a cash is credited in the books of account, it would be a cash credit. So that name was giving some, means the name was not effective vis-a-vis the intention of the section. So now that name has been changed to unexplained credits. Instead of cash credit, it is now unexplained credit. Now unexplained investment remains the same. Then we have two sections, unexplained money and amount of investment not fully disclosed, 69A and 69B. Now both these two sections, that is now merged in section 104 of the 2025 Act with the heading unexplained asset. And unexplained asset is defined to include money, bullion, jewelry, virtual digital asset, or any other valuable article or thing. So these two sections, unexplained money and unexplained investment not fully disclosed in the books, that is now consolidated as unexplained asset in section 104. Now 69C remains the same. The substituted section is 105. Now 69D, amount borrowed or repaid on hundi. Now its name is changed and the name is amount borrowed or repaid through negotiable instrument, hundi, etc. So this negotiable instrument word has now been included in new section 106, which corresponding to section 69D. So that change has been made in the deeming provisions. Now chapter 6A deduction. Now chapter 6A deduction, that has been moved in schedule 15. So chapter 6A deductions mean 80C and all those sections. 80D, 80 double D, 80 and all 80HI, whatever those sections, they have been moved to schedule 15. Now 80TTA and 80TTB, which gives a deduction in respect of interest earned from saving bank account, one for the general public and another for the senior citizen, that has been merged into a single section 153. So instead of two sections of 80TTA and 80TTB, it is merged into a single section 153 with clearly defined subsections. Now eligible SC under section 80PA, this is a producer company definition, so that has been clarified. Then tax incentive of section chapter 6A, all those sections which are not available in the new tax regime, so they also find place in the 2025 Act, though in the new regime these are not available, new taxation regime, new tax regime, but all those are now contained in schedule 15. Now section 80JAA means employment of new persons and provision relating to startup or IFSC, they also remain in the 1920-25 Act. So this chapter 6A deduction has been streamlined. Then TDS and TCS provision. Now, presently, this TDS and TCS provision is very bulky and spread. Right from section 192, it goes up to section 206 plus 6A, double A, and all that. Now, what has been done in this new act, that the TDS provision is now contained in section 393. 392 remains with salary. So 192 and 392 are 18. But 393 incorporates now 193 section to 194T section. And that has been now contained by way of 3 tables. And that table has been made specific with reference to the payees, that is whether it is resident, non-resident, and any other person. So all different sections of TDS, they has been now categorized and tabulated in 3 parts. One is what is applicable to the resident, what is applicable to non-resident, and what is applicable to any person. Now, for example, presently we have a TDS on rent, and that is in section 194I. So presently the language is written. It is a written language. Now, instead of written language, it has been tabulated. How it is tabulated? First column is the nature of income or sum, so it is mentioned income by way of rent. Second is payer, person other than specified person. And what is the rate and threshold? So rate is given in the third column, rate 2%, and threshold is 50,000 for a month or part of a month. So similarly, all the sections, if it is commission or brokerage, if it is payment to contractors, income by way of a contract payment, or fees for technical services, or any other section, dividend, all those. So all those has been given in a table, and that table has been further bifurcated into payment made to residents, payment made to non-residents, and any other person. Now there is separate table for non-deduction of tax at source and deduction for and declaration for no deduction of tax at source. So that has also been incorporated. So replacing section 197. So that has been replaced by way of a table in section 393. Now, likewise, the TCS provision, which is now presently contained in 206C, that is incorporated in 394 of the present Act. And 394 contains one table which specifies the nature of receipt, monetary threshold, collector and rate of TCS, and also lay down the condition for non-collection of TCS. So that TCS provision is now consolidated into single section 394. Now, the provisions which has been throughout the various chapter in the existing act, that has been merged into this one section under 4 heads: certificates including lower deduction and collection certificate, compliance and reporting, consequences of failure, and processing of the statement. So that it also is contained in these sections. So that is how this TDS and TCS provision has been streamlined. Now, return of income. So it is contained in chapter 15 of the Act, and it is divided into 2 parts. Part A is pertaining to PAN and Part B is pertaining to filing of the return of income. So as such, there are no change. All things are the same. Only it has been more better placed so that it is easy to understand instead of various scattered provision in the 1961 Act. So all those things has been put in a tabular form in section 263, where what is the requirement of filing the return by which person. So all those has been considered here, and it is in a tabular form. Now, assessment procedures. Those assessment procedure is now also converted into a tabular format under section 268 of the 2025 Act. 144B, which is the procedure for making faceless assessment that is redrafted in section 273 of the 2025 Act. Section 153A and 153D that has been omitted, which is the assessment in case of surge person. So because those section is no more effective from 1st April 2021, so that has been omitted. But the special provision for search assessment where searches is conducted after 1st of September 2024, that is now incorporated in section 292 to 301 of the present act. So 158B onward, that is now incorporated in 292 to 301 of the 2025 Act. There is no policy change. Some minor changes has been made with reference to 148 notices, which is now contained in section 280. And what is provided that any direction of approving panel or any finding or direction contained in an order passed by any authority, tribunal or court that would be considered as an information for the purpose of section 148, for which the procedure of 148A means passing an order before issuing a notice of 148, that would not be required. And the provisions for faceless scheme. Presently, all assessments are being done under the faceless scheme, and this faceless scheme is with reference to each of the chapter. For assessment, there is a faceless scheme. For assessment, for penalty provision, there is a faceless scheme. For appellate provision, there is a faceless scheme. So all those has been consolidated into one section, that is section 532, which confers the power to the government to frame the scheme for eliminating the different problems. Now, advance tax refund and interest provision remain the same, but here how to calculate the interest, a formula has been given. So, for example, there is a formula: I is equal to 1% into A into T. So, this I means interest. So, how we are calculating? Suppose interest at the under section 234A. So, interest is equal to rate of tax. Rate of interest is 1%. So, A is the amount on which this is to be calculated, and T is the period, time frame. So that is how all the things has been converted into formula instead of the written language. So those calculation has been given in all these sections. Then one important change by way of section 159(7) of the Act is double taxation relief, interpretation of the terms contained in the tax treaty. So what has been provided, and it has been made very specific, because sometime when we have a double taxation agreement with a country, and we have a provision under the Income Tax Act also, and there is a word used in an agreement, and it is defined there, and it is also defined in the Income Tax Act. So it is clarified that if there is a word used in an agreement, and that word is defined both in the agreement and the act, then the meaning which is given in the agreement, that would prevail. Similarly, if a term is used in the agreement, but it is not defined in the act, but has not been defined in it, and a term is used in an agreement, but the definition is not given in the agreement, but the definition is given in the act, then the meaning given in the act would prevail. That would apply. Now, third clarification is given that if a term is used in an agreement, but it is neither defined in the agreement nor in the act, then the meaning which is given in the notification issued by the central government, that would be applicable from the date of the agreement. And if it is neither defined in the agreement nor in the act nor in any notification, then the meaning which is coming from any other law of the central government, that would be applicable for giving the meaning of that term in the agreement. So that has been made now more clear. Then some other amendments, just to note is, hitherto we has been using the word notwithstanding anything contrary to the contrary. Now this notwithstanding anything content has been replaced by the word irrespective. So wherever an exception is to be given to a particular section or subsection, then it is mentioned that irrespective of anything, irrespective of subsection 1 or subsection 2, then it is clarified. Instead of notwithstanding what is contained in section 1 and 2. So notwithstanding is replaced by irrespective. Now there is a definition section in section 2, but in the present act there are certain definition given which is relevant to a particular chapter or a particular section. So in the present act, that definition is called as interpretation. So in each of such chapter, for example, if you go to the NPO taxation, so there clause 7 is in relation to interpretation. So that interpretation would apply to the terms used in that chapter. So there is interpretation chapter, interpretation clauses in certain chapter. So one is to look into that interpretation for deciding that what that terms mean. Then there is no change in the taxation methodology or curbing of income in the new act. All rights and duties of the taxpayer continue to remain intact. The taxpayer will get his due refund in accordance with law. The faceless approval and registration we have just discussed earlier. Sorry, the faceless approval or registration has not been removed. So whatever approval, they would all go faceless. The exempt entities continue to be under obligation to file the return of income if their total income before allowing exemption exceeds the maximum amount not chargeable to tax. So whosoever is claiming a exemption of section 10 vis-a-vis the present schedule 2 to 8, if their income exceeds the maximum amount chargeable to tax, even if their income is exempt, they are required to file the return of income. Now, due dates of filing of the return for each category remains the same, but it is now presented in a tabular form. No increase in the punishment for any offense under the Act, and there is no new provision section introduced in any of the provisions of the Act. So these are the important provisions, and I think the time is up for me. It is 6:10, but only for a better understanding, what I have done, that I have summarized whatever is the present chapter and what are the earlier chapter containing the sections in the subsequent slide, and those are contained in this tabular form, that what are the chapters of the Income Tax Act 2025, the chapter contain which topic, what are the particulars of that chapter, and what is the corresponding chapter and section of the Income Tax Act 1961. So if one go through this table, then one can easily comprehend that how the new act vis-a-vis the 1961 act is to be compared, and that would help you in learning what have been in your mind, and to relearn what now you are to capture in your mind. So this is what I wanted to talk to you. I am not going one by one because the time is over. So I hand over the further proceeding to the coordinator of this meeting, and thank you to the participants. If there is any query, I would love to answer those.
Thank you, Pawan sir, for such a wonderful and practical session. There is one question from one of our audience.
Yeah.
Will the principle of mutuality will still apply? Can an apartment owner association get itself registered as non-profit organization? If not, then how it will be taxed?
Kindly repeat again. Will
the principle of mutuality will still apply? whatever he has written, I am reading that
Yes.
para.
The principle of mutuality would remain. The
Yeah.
principle of mutuality as such is not contained in the act. The principle of mutuality is that when there are same contributor and the same participators. So the contributors and the participators are same, then the concept of mutuality applies. For a simple example, suppose we four friends go to a restaurant and we contribute the amount and we take a dinner therein. So that is the concept of mutuality. So when same person contribute and the same person take the return of that, that is the concept of mutuality. So the concept of mutuality still remains in the statute as such. It is not with reference to NPO organization.
In the same
NPO you
question,
have to get a registration. For a concept of mutuality, there is no need of any approval or registration.
yes, sir. In the same question, further, can an apartment owner association get itself registered as non-profit organization?
No, no.
If
That
no,
goes by that goes by the concept of mutuality, because the apartment owners, they contribute for the maintenance of the society and they are the participators. So there the taxation would be in a different context if whosoever contribute and whosoever participate, if everything is equal, there is no tax liability. But if there is some receipt or some surplus and that surplus exceeds the minimum amount chargeable to tax, that would be subject to tax, for which there is a separate rate for taxation of the cooperative societies. In the present act also there is a separate rate, it is 5% and something like that.
so it will be taxed as a society.
Yes, yes.
Okay. So now there is no further question. So as we bring this insightful session on Income Tax Act 2025 to a close, it's my privilege to extend a heartfelt vote of thanks. On behalf of all participants, I express my deep gratitude to our esteemed speaker for simplifying such a vast and significant subject. Their perspectiveness on the reform, simplification, and challenges under the new Income Tax Act have truly enriched our understanding and will help us prepare for this new area of taxation. I also thank the organizer for this opportunity and all the participants for their active involvement and keen interest. With this, we formally conclude today's webinar. On behalf of the CP committee, I once again thank you, our eminent speaker, respected dignitaries, and all participants for joining us. We look forward to your active participation in future CP program also. Wish you all a very good evening. Thank you.
Thank you.
Thank you,
Thank you.
Professor. Thank you, all the participants.
We would like to thank both the faculty and CA Vijay sir. Thank you so much, sir.
Thank you. Thank you. Yeah.
Sanjay ji, you can end.